All right, we'll now move on to the next problem. Sencom Limited, listed company, issued rupees 1,50,000 5% debentures on 30th September X0, on which interest is payable half yearly on 31st March and 30th September. So interest dates are 31st March and 30th September. The company has the power to purchase debentures in the open market for cancellation thereof. The following purchases were made during the year ended 31/12/X2 and the cancellation were made on the same date. So on 31/12/X2, okay. So during the year X2, they are making some purchases and cancellation is happening immediately. On 31/12/X0, investments were made for the purpose of redemption were 22,500. 1st March X2, rupees 25,000 nominal value purchased for 24,725 X interest. 1st September X2, rupees 20,000 nominal value purchased for 2125 X cum interest. You are required to drop the following accounts up to the date of the cancellation: debentures account and own debenture investment account, ignore taxation. So we are okay. So the requirement is very clear. We need to prepare 2 ledger accounts, one for debenture account, other is the own debenture investment account, right? So let's open 2 ledger accounts like this. 5% debentures account, and the debenture interest dates are 31st March and 30th September. And then we will have the second account called as own debentures investment account, right? I have removed all the numbers. I will do the computation. I will show you, right? Now, where do we start? We actually start with 1,50,000. Sencom Limited issued rupees 1,50,000 5% debentures on 30th September X0, right? So what is the year ending first? Is it April to March or January to December? It is 31st December for the year ended. So it's a calendar year. So what I do, 1st Jan 20X2 by balance brought down, it will be 1,50,000. This is the value of debentures which is outstanding, right? So I'm going to put 1,50,000, which is the opening balance of the debentures, right? Now, what we can do, let's look at the cancellation part. 1st March X2, you are going to buy investments, right? 25,000 rupees nominal value investments purchased for 24,725 excluding interest. So 1st March X2, we will go to the debenture investment account and we'll pass an entry for the purchase. We'll say to bank, right? It is the face value is 25,000 and they say it is excluding interest. Excluding interest, how much we paid? 24,725. So we will put 24,725 in the amount column. Correct? But what is the interest? You are actually purchasing on 1st of March. When was the interest last due? On September. So October, November, December, January, February. 5 months interest would have accrued on these debentures. So if you calculate the debentures interest for 5 months, let's do the calculation. You will get how much? Let's do the calculation. So you will get 25,000, right, into 5% into 5/12. If I do that, I will get 521 as the interest, right? So that is the first working. If you see the working note number 1, I would have computed this 521 only, but I have showed you here how did we compute. So its face value is 25,000 into 5% interest rate into 5/12 because interest accrued for 5 months. So it's 521. Now the second working note is on what? Is the profit on, is the, okay. Now this is the entry for the purchase. Own debenture to bank. Now we are going to cancel immediately, right? Once you have purchased, now you're going to cancel it. How do we cancel it now? The entry is 5% debenture account debit to own debenture 24,725. Okay. So we will say on March 1st by debenture we will put 25,000 here and we will say 24,725. Because we actually purchased for that value, right? 24,725. So we are going to cancel it with that value only. So what is the profit on cancellation? So you are going to cancel a liability of 25,000, right? By paying just 24,725, which means there is a 275 profit. This is the first transaction. Now, let me repeat. So 1st of March X2, we are actually buying the investments from the market. So we pass entry own debenture investment account to bank. Nominal value is 25,000 and we are paying 24,725 excluding interest. So we will not put anything in the interest column right now. In the amount column, we put 24,725. Now we calculate the 5 months interest which is accrued. It comes to 521. This is the entry for the purchase. Now having purchased the investments, we are going to cancel it against the debenture liability. So we are going to credit, we are going to credit the own debenture investment account by 24,725 and then we are going to debit the debenture account with 24,725, which means we are cancelling a liability worth 25,000 by paying 24,725 in the market. Thereby, there's a profit on cancellation of 275. This is very important. Now let's look at the second purchase. 1st September, we are again purchasing 20,000 rupees, 20,000 nominal value for 2125 come interest. So nominal value is 20,000. So let's put 20,000 in the column. But most important thing is the total amount paid is 2125, which is including interest. It's come interest. So the total amount paid is 2125. So we need to segregate. So what is the interest component of this? So 20,000 into 5% into, when do we purchase? September 1st. So which means 31st March is the last date when we have got the interest. So April, May, June, July, August. So 5 months interest will be 417. That's a 5 months interest. Now we are paying totally 2125, right? So if I want to compute the amount excluding interest, 2125 minus 417, I will get 19,708. The total amount paid is 20,125, which is including interest. It's come interest, which is including interest. So when the interest is 417, so what is the part which is excluding interest? It's 19,708. Now once you've done this, again we are going to cancel it. So we will say 20,000 here. We will transfer it 19,708. We'll transfer to the debentures account. So under the debentures account, we'll say to own debenture 19,708. So we are going to cancel a liability worth 20,000 by paying just 19,708. So what's the difference between 20,000 and 19,708? It's 292 rupees. This is the profit on cancellation. Okay. Now, if you look at the final balance, you had debentures worth 1,50,000. But now that you have purchased debentures in the market, what is the closing balance you get? $1,05,000. That is a closing balance of debentures. So that marks the close of the, so we have closed the debentures account. Now let's come to the own debenture account. Everything is done, but look at the interest column, 938. We will transfer that to P&L account, 938. Okay. So if you look at all the working notes, I've given the working note reference 1, 2, 3, 4. There are 4 working notes. It's just the numbers which you worked out. Working note number is at 521, right? Which I explained it here. Working note number 2 will be the profit on cancellation of 275. It's there here. Working note 2. Working note 3 is going to be the again interest of 417, and working note 4 is going to be the profit on cancellation of 292. Pretty straightforward, simple problem, but you need to really appreciate how the entries are made. Okay, so this marks the end of the problem.